Hi everyone, I'm Hardik Panchal from Domain and Consulting team of Cygnet. Yesterday was a very eventful day. We had the 56th GST Council meeting going on, and which was held nearly after 9 months from the last meeting. The main theme of the meeting was around focusing on improving lives of the common man, ease of doing business, simplification of tax structure along with the rate rationalization. It was interesting to see that 2 days meeting was concluded in a day, and even after a long day of the meeting, Honorable FM came for a press conference, gave us a brief walkthrough of the recommendation given by the GST Council. And to get more insight on those GST Council recommendation, we have with us Tapas Ruparelia, who is our AVP of the Domain and Consulting team. Hi Tapas.
Hi Hardik.
First thing first, what things are getting cheaper? When can we buy things? And your take on the recommendation given during the meeting.
Thanks for having me. In fact, I think we are also meeting at a similar gap of as the GST Council met. Probably that was 9 months. We are probably meeting after 7 or 8 months. But yeah, wonderful having this discussion again. What becomes cheaper is, of course, there's a long laundry list. What they've essentially done is the GST, the rate of GST that was there right now, that is there right now is 5, 12, 18 and 28. These are the major rates that are there in GST. What they have been trying to achieve probably since past couple of years, and they have been into multiple discussions, have set up different committees, and finally probably they seem to have found out a magic formula to resolve this. And what they have done essentially is they have kept only two rates majorly onto the GST regime, is 5% and 18%. All the goods or services, and probably majorly goods only, which are falling under 28%, have been brought into 18%. And most of the goods or services that are falling under 12% have been taken into 5%. Of course, there have been also cases where the goods from 12 have gone into 18 as well. If you read the fine print, it's not always that everything from 12% has gone into 5%. Some things have gone into 18% as well. But to name a few, say purchase of TV of more than 32 inches was earlier in 28%, has gone into 18%. Air conditioners, which are in 28%, have been brought into 18%. Items for day-to-day use of a common man, toothbrush, toothpaste, so on, pencil, erasers, these kind of goods have been, many of them have been exempted, many of them have been brought into 5%. So the entire press release, if you see, although it's an 80-pager press release, the first 2-3 pages give an insight of what has been discussed. Then there is an annexure which gives an entire list of what has changed, and it beautifully also states as to what has gone from 28 to 18, what has gone from 18 to 5, what has gone from 12 to 5, what has gone from 12 to 18 is also something that they have mentioned. Fertilizers is something where there were a lot of anomalies. They have rationalized the rate. Medicine, so to say, used in medical procedures, certain life-saving drugs have been exempted. Life insurance policy or health insurance policies for individuals have been exempted. It was expected that they would keep a lower rate so that the input tax credit keeps flowing to the insurance companies and ultimate benefit is passed to the end customer, but that has not been done. And I think that is something that is really important to understand, that the rate reduction that has happened is not ultimately, you are not going to immediately see on the day on which the rate changes come in. You are not going to see an effective reduction. It depends upon the supply chain. People would have bought stocks. The stocks would have been lying around. They would have purchased the input goods on which they would have incurred certain costs. So there's a lot of different calculations, etc., that would play around. But yes, on a face of it, there are so many goods and services on which the rates have been reduced. Textile, electronics, fertilizer, certain infrastructure items also, the rates have been reduced. So yeah, especially food items also, most of them have been either brought into 5% or 12%. There was a famous case of whether parota is equal to roti or not. So that conundrum has also been resolved. They have put it into standard rate, probably exempted. So that's how the entire rate reduction has played.
Okay. There has been mention about GSTAT as well, right? User manual has been published, website is live. What are the next step that has been recommended by the council for the GSTAT?
So Tribunal is something that everybody has been waiting since the inception of GST. In fact, it should have ideally been in place in the initial few years of the introduction of GST, and non-functioning of GST Tribunal is something which has overburdened the different high courts because of non-availability of any remedy. People have been knocking the doors of the high court. What we saw in the earlier month, that is in the month of August, is that most of the appointments have been done. There are so many members of the tribunal across benches have been appointed. Of course, there was a consolidated notification. Now these members will be posted across different benches across the country. All the judicial as well as the technical members have been appointed. The state governments have also started appointing their members, which would be ultimately posted into the tribunal. So what they have said in this press release now, which is an absolute good news, is that the tribunal would they would start accepting the appeals. The filing of the appeals would begin towards the end of September. So if you have any pending appeals that the professionals have to prepare, this is the right time to start preparing the appeals. The sooner you file the appeal, the probably sooner the case would get scheduled for a hearing. And they have said that the tribunal would start functioning towards the end of December 2025. So in a couple of months, the tribunal would start functioning. And while the law says that you have 3 months from the date of appeal, or from the date of an appellate order to file the appeal before the tribunal, because it was not functioning, they had issued a notification stating that the time limit to file an appeal before the tribunal would start from the date on which the member of the tribunal assumes his charge. But from the press release, it seems that even though the members have been appointed and they might start functioning towards the month of December, they are going to give another 6 months. So they are going to bar the appeals for the previous months till the 30th of June 2026. So you have time till 30th of June 2026 to file an appeals. But I don't think so there is any reason to wait till so long. If you have any appeals which are pending, you should start working on it right away, because they have said that towards the end of this month, they would be starting accepting the appeals.
Great. Thank you. So the rates which has been recommended by the council, when do you think are going to get live? Or
Good question again. So they have mentioned it in the press release as well as during the press conference. They mentioned that they want to bring these changes effective from 22nd of September. So most of the rate changes, or in fact, let's say probably almost all barring a few changes, will be implemented from 22nd of September. That's that's mid of the month, or probably part of the month. You would have a separate rate for the same goods, and the remaining part of the month you would have a different rate of goods. All this cigarette, BD, pan masala, etc., because of the cess impact, they would say that we'll come back for these goods at a later date. But other changes, 5 to 18, 18 to 5, and whatever changes that has happened, all these changes would come into effect from 22nd of September.
Right. So great point. So in mid-month, the changes are being happening, right? So how do you see the time of supply being playing out here? When should someone apply a new rate? When should someone apply a old rate? There are different components to be taken care of. So can you throw some light on it?
Yeah. So these situations are covered under the provision of time of supply under GST. And to make it very simple, I mean, I'll not go through the provisions of the law, but to make it very simple, to attract tax, there are actually 3 elements. One is actually making the supply. Second is raising an invoice for it. And third is receiving of payment. Any of the 2 conditions, if they are fulfilled, then the moment these 2 conditions are fulfilled, you apply tax. So on 22nd of September, if you have raised an invoice and received a payment, and the goods have not moved, or let's say the goods have moved and you have raised an invoice, only the payment is pending. In that case, if this has happened before 22nd of September midnight, then in that case the old rate applies. But let's say you have only removed the goods on on the 21st, you are raising an invoice and receiving the payment thereafter, then the old rate, the new rate applies, because the 2 conditions are getting fulfilled afterwards. But mind you, I mean, these are all theoretical concepts. You cannot remove the goods without raising an invoice, right? So naturally, if you are removing the goods, your 2 conditions are going to be fulfilled at that point in time. So if you have removed the goods and raised an invoice before 12 o'clock midnight between 21st and 22nd, the old rate applies. If the two conditions are fulfilling, after that, the new rate applies.
Yes, so that is a really great point. It would help the taxpayers to identify what rate would be applicable on it. So you also mentioned something about the compensation cess earlier, right? So it was originally due for the sunset very long back, but now we are finally having a sunset for compensation cess, right? But there are few goods on which the compensation cess is going to be continued. So can you throw some insights on it so to understand it more better?
So exactly as I just very briefly touched upon, the cess was introduced predominantly to compensate the states for the loss in revenue while coming into GST. So GST took a lot of time. It started ages ago, probably centuries ago, the discussion started. Of course, I'm just exaggerating, but yes, the discussions of bringing in GST went on for quite a few years, and the major objections from the state was that they envisage losing revenue because they would have to share their revenue when it comes to sale of goods. So that was assured by the government to them that we would peg a number and then calculate a year-on-year increase on the revenue that you are supposed to earn, and we will ensure that you keep on getting that revenue. To compensate that, they had brought in the cess, and it was agreed that this cess is going to be for the first 5 years. By that time, the revenue buoyancy to be achieved, the states would also realize that actually they were not facing losses. They would also understand how effective compliance, etc. works. So the idea was that in the first 5 years, the things would settle down and the states would not require the government support to settle this or depend upon the central government to give them the compensation of the loss that they have faced. So what the government now is saying is that all these sin goods, which is tobacco, predominantly tobacco products, cigarette, pan masala, so on and so forth, these kind of products would still keep on attracting the cess till the time the government is able to repay the loan that they have taken and the interest on it, so as to compensate to the states. Once that has been achieved, the government would stop the cess, and then the central government as well as the states will be on their own. When that is going to happen, nobody knows. The authority has been given to the finance minister to decide that yes, this is done, and then announce that yes, we are going to stop the cess.
Okay. So that was on the cess. We covered the rate part. Have you seen any other announcement apart from the rate and the compensation part that has been included in the presser and that everyone should be aware of?
Absolutely. There have been a lot of other amendments as well. One, my favorite is change in the provision related to taxability of intermediary services. This has been a point of contention since GST has been introduced. In fact, prior to that as well, under the service tax law also, this intermediary issue was there. When GST law was introduced, there were a lot of litigations. There was one set of people who knew for sure that they were intermediary, and they approached the high courts. In fact, there is a judgment of Gujarat High Court in case of there was some metal association who had approached the Gujarat High Court. I don't remember the exact citation, but Gujarat High Court, one of the associations had approached where they challenged the constitutional validity of the intermediary services, and Gujarat High Court said that no, it is within the power of the government to tax these services. So what essentially happens is that there is somebody who is situated in India who is facilitating supply of goods or services between a person in India and a person outside India. They are actually helping the person outside India either to procure goods from India or make a sale into India, and they are earning commission out of that foreign supplier or the foreign customer predominantly. In that case, while normally these kind of services would be treated as export because the person is bringing in a foreign currency, if you are categorized as an intermediary and if you are situated in India, you would have to pay tax. So there was an 18% tax which was actually imposed on these kind of services. Second part of it, there was a confusion as to what kind of services would become an intermediary, and a lot of GCCs which are coming into India right now. That's the focus of the government, to bring in the GCCs into India. What the government officers were saying is that these GCCs who are situated in India and are making supplies to their foreign counterparts are also a sort of an intermediary, because they are ultimately helping them make a supply to their end customers, and this was actually harming the entire GCC industry. So rather, the government has actually clarified the scope of intermediary, which was very clear. As such, these GCCs were never supposed to be a part of the intermediary services. They were actually providing subcontractor services, which is clearly out of intermediary. But what they have done is they have entirely removed the provision. There was a subclause which says that in case of intermediary, the place of supply would be in India. They've removed it, and they have mentioned it in the press release that the default place of supply would be the place of supply in case of intermediary, which is where the ultimate recipient is located. So in case of intermediaries now, the place of supply would be outside India, and they would be at par with any other service exporter. So that is one important takeaway. People had actually planned these kind of ventures outside India. They were setting up in an IFC outside India, probably Singapore or somewhere, because they were actually ending up paying 18% GST in India. To get away with it, now they've realized that this was actually, we are not collecting the taxes, but we were also losing out onto the foreign currency. What these companies were doing is only putting the back office operations into India, but actually actual commission income, etc., was routed out onto some other favorable jurisdiction. So that would, to a certain extent would get addressed. There are certain also procedural changes with respect to refunds. They are saying that we'll process the refund within 7 days, and barring those taxpayers who are categorized as a risky taxpayer, if you are not that risky taxpayers, your 90% of your refund will be granted in, say, 3 to 7 days. Similarly, there have been some procedural changes with respect to inverted duty structure, so on and so forth.
Right. So indeed, the intermediary amendment is a big relief and export booster as well. Apart from the procedural changes, there is something from MSME as well, which has been notified in the press given by the government, right? So, what are the highlights of those changes which are crucial for the MSME that government has brought?
So one thing is, there was also a requirement of credit note. There was a circular 212, right, which said that in case a supplier has issued a credit note, he has to obtain a certificate from the recipient to that effect to ensure that the recipient has actually reduced the proportionate ITC. Then only the service provider or the good supplier was allowed to reduce the tax that he would have paid based on the credit notes. They're doing away with this entire condition and putting the onus onto the recipient, saying that if a credit note has been issued, you have to reduce the credit. And this brings us to the IMS amendment. Probably this is going to, it is going in the direction to implement it within the IMS framework, which says that if the supplier issues an invoice, the recipient, issues a credit note, the recipient has to accept that credit note. Once the credit note has been accepted by the recipient, it is considered that he has taken the effect into his returns, and the supplier will then be able to reduce his liability. If the recipient rejects it, the supplier will not be able to reduce the credit. So again, this has been, there's a simple line item. They are saying that we will change the provision of the law. These kind of amendments are actually better understood when actually the relevant rules or the section is amended. When you read the legal language, you realize that, oh, this is the change that is going to come. Right now, on the face of it, they are saying that we are going to do away with the circular 212 requirement of getting the certificate from the recipient. The supplier is not required to get a certificate, and the recipient will be required to do a reversal. That's number one. Second, in case of MSMEs, they have said that they will bring a specific scheme for getting registrations, and they are saying that the time to take registration will be reduced to up to 3 days. So in 3 days, they are going to give you a registration, but this is going to be a whole new scheme which will be placed before the GST Council, which will then be approved, and they will then introduce this. Another change, which is a very big change in my view, is that in case of suppliers who are making supplies on e-commerce websites, right now they were struggling. The e-commerce websites as well as the suppliers on those websites were facing troubles in getting registration. So if I am situated in Gujarat and I have a killer market product which I want to supply it, and it has to be sold across states, what was happening is that these e-commerce websites were envisaging the demand, were anticipating the demands based on their algorithms, and they were making a stock transfer into the different states into their warehouse. Now, if the goods are belonging to me and just lying into the warehouse of an e-commerce operator, if they are moving from one state to another, it's actually a stock transfer for me, and I'm actually supposed to get a registration into the other state where these goods are being transferred. The registration I was not getting into the other state, and this was creating a mess for small suppliers who were actually wanting to make a supply into different states. And these e-commerce operators were also demanding to the government to ease out these mechanism, because essentially they would only require a virtual place of business, because the goods are essentially moving from the warehouse of the e-commerce operator from one state to another. So that they very categorically mentioned that getting them a principal place of business in different states is something that they are going to bring upon, which is going to give a big boost or big compliance easing, so to say, to the suppliers who are making supply on the e-commerce websites. Similarly, one last procedural change that they have brought in is there is a provision of e-commerce operators right now. Services such as your online food ordering, online taxi, meter, these radio cabs, or getting services, miscellaneous services at your doorstep of a barber services or a cleaning services, so on and so forth. These kind of services were covered under reverse charge. Now an online delivery, the services that we have where goods are getting delivered from one place to another, that is something which was not really covered. But all this quick commerce, so to say, hotel accommodation, radio taxis, and quick commerce, food delivery, this one part of this goods delivery from one place to another using these kind of similar suppliers through these e-commerce operators is something that was out of the ambit of reverse charge. That has also been brought, not reverse charge, so to say, but the tax liability will be paid by the e-commerce operator. It is brought under the Section 9 thing.
So indeed, this is going to lessen the burden on the MSME, and they would be happy to now do business around. Lastly, the Revenue Secretary in the presser yesterday just said that the impact on the revenue would be around 48,000 crores. Right? How do you see that? What would be the actual impact? The ITC's availability, since certain goods are being exempt now, which were in the 5 or 12%, which are getting exempt now, the ITCs would be blocked. The COGs is going to be increased. How do you see that component of the rate reduction being, transferred in the hand of the end user?
So wonderful and a very pertinent question, and it's a very important point for everybody to understand. So when it comes to rate reduction, so let's say for an example, the reduction in the insurance, right? So the industry or everybody was demanding that the rate of GST on specifically on life insurance as well as health insurance of individuals should be should go away is what was being demanded, and the discussions have been going on since probably more than a year now. I remember last August also this discussion came up at the GST Council meeting, and it did not come up. In fact, I have a friend who works in an insurance company who reached out to me yesterday. There was one image that was being circulated before even the press release started, which said that the rate of insurance on individual health and life insurance policy has been changed to nil. And he reached out to me saying that if it's nil, then I still get the credit, right? Which is where I said that let's hear the press conference, and that let's also have a look at the press release, and then let's have a look at the final rate notification which comes in. But based on what we see in the press release is that the rate has not been reduced from 18 to 0. You get a credit only when the rate has been reduced from one rate to another, and there is no condition that the ITC will be reduced. So normally 0 rating is something where it's still a rate of tax that is applicable, but you don't actually pay any tax and you still avail the credit on it, which normally happens with the exports. Exports are always 0 rated. In case of insurance, they very clearly, in fact, the image that was being circulated said nil, but the press release very clearly says that these services have been exempted now. So one has to really understand that as a consumer, I cannot say that if yesterday or if the premium that I paid in say January 25, my insurance company, let's say, charged an insurance premium of 1 lakh rupees and charged 18% on it. Come next January 2026, he is going to charge me only 1 lakh of insurance premium. One has to understand that the insurance premium has been exempted, so that 18% is definitely not going to apply. But the 1 lakh of insurance premium that was being charged to you, that was on an assumption that the insurance company was getting a credit of lot of inward supplies that it was taking. Now that this GST, outward GST has been exempted, they will stop getting the input tax credit on the inward side. Probably they might have to hire a couple of resources to bifurcate between the health insurance for individuals being taken versus the normal insurance being taken, the other general insurance being taken by the companies, or the corporate insurance that are being taken by the companies to give a health insurance to their employees. That is still not being exempted, and it seems to be very evident on the face of the press release. So now the insurance company would have to look at the part of their services is being exempted, part of their services is being taxable. They would need additional resources to do this calculation. And so far as this exemption is concerned, the inward ITC is gone. So your 1 lakh of insurance premium which was there is certainly going to increase. It might not increase to 1,18,000, but it is going to increase. And what I understand, of course, I'm not an insurance expert, but these insurance companies would have to go to IRDA to seek a permission to increase the premium is what I understand. Of course, probably because of this, they might not be required. But again, the insurance premium, the base premiums, if you have an individual life insurance or an health insurance, are going to be increased. Similarly, there are a lot of goods or services, specifically services which have been brought from 12% to 5% bracket or from 18% to 5% bracket. These goods or services, it has been written in the notification that this is being brought into 5% subject to the condition that no ITC will be available. So if you are coming down from 12% to 5%, your 7% rate is being reduced, but all the inward supplies that are being consumed in making these supplies, that tax also becomes a cost. So your, as you rightly mentioned, the cost of goods sold or the cost of provision of services gets increased. So your base value gets increased. So simple example that I gave for insurance, 1 lakh and 18,000, that 1 lakh is not going to remain 1 lakh. That is certainly going to increase. So your base value is of course going to increase. Similarly, one more thing that has to be considered, in fact, they have released an FAQ along with the press release, which says that you imagine a situation, you are not always going to purchase the goods on the same day and sell it on the same day, right? And people might have an inventory which they will not be able to sell before the 22nd of September. So what happens in case where you have those inventory purchased at a rate of say 12% or an 18%, and those goods are lying with you, and on the 22nd of September now you are selling those goods at a 5% rate. Will you be able to claim the refund of the additional tax that you have paid? The circular says no. The inverted duty structure is not allowed when the goods remain the same. Although there have been contradictory judgments of High Court, but still they have gone ahead and said it very clearly into the FAQ that if you have purchased the goods on 21st of September and paid 18% GST on it, if you want to sell these goods on 22nd of September and it applies and it attracts 5% of GST, you are not going to get a refund of that additional 13% of tax that you have paid. So that is going to be built into the cost of what is being sold. So this is something that is going to be there into the textile industry. Initially they had also, when the rate changes happened in textile industries earlier, they had also come up with a provision that if you have an accumulated ITC also because of these kind of purchases, that accumulated ITC also would get lapsed. That kind of provision has been struck down by the Gujarat High Court, but of course it would still be taken up to the Supreme Court, and God knows what would happen there. But the intention seems to be very clear from the government side. Whatever tax has come to us, we are not going to give it back to you. The reduction is going forward, and the increase of cost is naturally going to be passed on to the customers.
Interesting insight. So as the rate are being reduced, obviously the benefit has to be passed on to the end consumer, right? So earlier when the GST was introduced, the Anti-profiteering Commission was also introduced, and if the rate are not being passed, the consumer can go and file a case in the Anti-profiteering. Similar provision is missing in the presser, and even in the press release or the presser which was being addressed by the Revenue Secretary and FM, there was no mention of the Anti-profiteering committee as such. So how it is going to play out now? If there is a rate is not getting passed on to the end consumer, what are my options?
Right. So the anti-profiteering provisions were introduced in the GST, and probably the cue was taken from Malaysia when it was introduced, because when GST was introduced in Malaysia, they saw a huge shot into the inflation. So they wanted to ensure that when GST comes in, the similar situation doesn't happen in India. So the anti-profiteering provisions also came in with a sunset clause. And these rates have kept on changing over a period since past 8 years that the GST have been into place. The rates have changed. What they are counting on right now is probably the reduction in rate will be passed on to the customers, because ultimately the demand has to be increased within the country. So if let's say that the rate of GST on television of more than 32 inches was a higher rate right now, it has been brought into 18%. Probably it was 28% and has brought into 18% now. If I tomorrow go into a shop and I want to buy a TV, I would also be consciously looking at the prices as to whether the company is marketing at a lower price or they have increased the base price, because ultimately these goods are always sold at an MRP, right? So while there has been a dead silence so far as the press release and press conference is concerned, probably if there is actually an undue advantage taken by everybody, they might want to bring in an anti-profiteering provision later on, because this entire rate change has been done at a huge scale, unlike the earlier instances where only one or two or a limited number of goods would have gone into a rate change. But it seems that the government is counting onto the suppliers that they would take benefit of this reduced rate and would try to increase their sales rather than profiteering themselves with the reduction in the rates.
Correct. So even I vaguely remember even the presser, it was just that oddly around 700 cases were registered in the anti-profiteering, and the volume that they were seeing was not that much. So, and they are trusting the industry that they would pass on that. So thank you. That was a wonderful insight. If you have any questions, please feel free to write to us. Thank you.